Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we're going to be taking a quick look across markets, talking about some of the themes that are in play this week, some of the moves that we're seeing. Probably should start here by taking a quick look at currency markets. I've got the dollar index here on one-day candlesticks, and you can see here that it continues to edge to the downside within the confines of this bearish trend channel that's been in play now since, well, for about a month actually. Continued failures to get back above the 21-day moving average. So technically speaking, things are looking quite bearish for the dollar right now. Looks like we are going to head back towards this double bottom for the year that we set. Well, initially back in early February, and then again we tested that area, but we did bounce earlier this month. But yeah, it looks like things are heading that way. Not helped by the fact that US yields pulling back a little bit from the highs they hit earlier this month. Maybe not so much in the 2-year, but the 10-year a little bit more, pulling lower. Stocks for now holding within recent ranges, which isn't too surprising. Look at this, the Nasdaq's been stuck within this really nice range. 13,200 to the upside, 12,800 to the downside, pretty much all month so far. But yeah, not too surprising to see these equities going sideways at the moment because we do have big tech earnings this week, pretty much. All the big boys, Microsoft, Apple, Amazon, and I think Google, all reporting this week. And I think collectively they make up about 14% of the S&P 500, and that weighting will be even higher for the Nasdaq. So yeah, whether we can see these big tech earnings uh, exceeding expectations, that could potentially support the market. If they're not as good as expectations, obviously that could weigh on the market. So far, the earnings season's been pretty good. Big banks pushed back against fears about an imminent bank crisis. We've also had, I think, one of the articles I was reading this morning said there's been a 77% beat rate so far versus expectations, where the historic average is a 66% beat rate. So a better than usual earnings season so far. But usually, how these earnings seasons start, they usually continue. So probably going to be a decent earnings season, basically. But other things we've got coming up this week, some important data out of the US. The highlight for me is on Friday, the Core PCE price index data for March. Pretty much, this is the Fed's favored inflation gauge. We are expecting month over month price pressures to remain roughly in line with where they were or where they have been, 0.3%. It's not where the Fed wants this number to be month over month. You want it to be in the 0.1, 0.2% range. That's more consistent with the 2% inflation target than 0.3, but it is progress. Um, it is certainly progress. But other key data points that we're going to be watching this week out of the US include this employment cost index for Q1. Obviously, wage growth is an important thing that the Fed's also tracking. If it does come in at 1.1, that's quite hot. That's 1.1% quarter over quarter, not year over year. So that's consistent with wage growth that's way above the Fed's inflation target. Then we've got Q1, the first estimate of Q1 GDP on Thursday. Always an interesting one. Consumer confidence on Tuesday. It's going to be worth watching all of these data releases as they could affect expectations for Fed tightening. At the moment, by the way, regarding those expectations, we're thinking there's going to be one more interest rate hike from the Fed next week. Yes, next Wednesday. But we're expecting that this final hike from 5 to 5.25%. Well, actually, from 4.75 to 5% to 5 to 5.25%. That's actually what that rate hike would be. But we're expecting that would be the final rate hike from the Fed this cycle. But we've got some other central bank meetings to be keeping an eye on this week, as well as the US data. The Bank of Japan, that'll be a big one. They've got a new governor now, Ueda. Um, and he recently has been talking about how he's going to continue with the current policy stance of basically ultra easy policy because he's been saying that trend inflation is still tracking below 2%. So it doesn't look like there's going to be too much change there from the Bank of Japan. But yeah, that'll certainly be worth watching. In terms of other data releases this week, I mean, if you're an Aussie trader, CPI. Um, preliminary CPI out of some of these Eurozone countries as well, like Germany. That'll be an interesting one. Canadian GDP. And then on Saturday, we've got these manufacturing PMI data coming out of China. So, fairly busy week, to be honest, on the data and central bank front. We're going to be watching to see whether equities can break out of recent ranges, whether the dollar downtrend continues. Things like gold continue to be trending higher, which kind of makes sense if the dollar's trending lower. Oil, let's have a quick look at oil. Pulled back recently, failed basically to get above this resistance area in the form of support term resistance since last October and the 200-day moving average. And when you've got the global or you've got the US economic outlook and other major economies basically getting worse, even though we had those surprise cuts from OPEC, I think it's kind of hard to make the argument that oil is going to, go back towards 100 at this stage, unless, economic performance in the US and other major economies does significantly outpace expectations. And then you got the likes of Bitcoin. Let's have a quick look. Consolidating below recent highs, a bit of profit taking, but probably the uptrend for the year remains in place. But yeah, guys, hope you all enjoyed the video. I think that's pretty much covered everything to start the week. Hope you'll find it informative, and I will see you all in the next one.